All right. How's it going, guys? Should let some more peeps come in. Let's see. Bitcoin's starting to chill out finally. Moo Juice, what's up? Trip, how you doing? Please talk about Axlar. Sounds like an alien from a movie. You can check it out. Lou, what's up? How you doing? DP, prayer. Are we going bearish for a bit? I'm on bear mode. Yeah, we've been kind of waiting for this positioning since I guess yesterday morning. We've just been on a tear, right? So now that we're at a spot where basically we grabbed a decent amount of liquidity up here, but there is still some resting right above our head. We don't technically have to grab. It's been fairly guarded. We've been having sell walls trying to keep the price down. DP's been on bear mode waiting for that short. Yeah, man. We've been sitting here for... It was just slow climbing its way up until finally it got that run up that we wanted, and we just recently lost momentum. We're at the Valley Area High. We had buy walls at the Valley Area High, so I didn't give any signal because I didn't want anyone jumping in on any shorts going against that that buy wall. The buy wall is probably gone now. We can take a look at it together and see what it's looking like. Yeah. I also, after the analysis today, I'll be inviting one of the members into the call so that you guys can ask any questions. Kind of like a one-on-one free coaching call. If you jump into the server, there's an announcement post. If you mark the green check mark, you'll be able to jump in on the live together. I'll just basically be clicking on this and then looking for someone random to pick within here. I already messaged 2 people. One, unfortunately, is busy. The other person hasn't got back to me, but Runway was one of the people I messaged. And yeah, if he doesn't get back to me by the time we start or finish our analysis, then I'll pick someone else. Oh, someone just popped in. And then, yeah, basically be a free one-on-one coaching call, but you'll be kind of like in public in front of everyone else. So it depends on how comfortable you are with asking those kind of questions in front of people. But yeah, basically be like a one-on-one coaching session where you can ask any questions about trading or assets in general, and I can get them all answered for you. And anyone who's watching can like learn from like through the person asking questions. DP saying he's hoping that we run up to New York Open and grab that liquidity above us. I'm hoping for the same thing. Yeah, around 110,850 area. There's quite a bit of liquidity. I bet we can look at it again and see how much liquidity is still resting there. And the fact that we just rejected just prior to it means we added more to that pot. So there's even more reasoning to come up, grab that liquidity, and then see that being used as exit liquidity from large players like whales or market makers or institutions to induce a drop back down. And that could be a front run opportunity around here before the break of this potential Valley Area High break. And if we do get that break, then we can get a full rotation back down to 107K. And kind of just trade and behave the same way we did last time we were in this Valley area right here. So see what happens. But that's what I'm kind of waiting on, trying to be patient. Let the paint the picture that we wanted, have it painted, and then jump in on the short from here. Right now, internally, on the low time frames, we can see that we've built a like inverse head and shoulders posture. We got above the VWAP. So like short term is looking bullish. The technical target for the momentum based target for the inverse head and shoulders has pretty much already been hit. Like we hit this little supply concern right here, and then came down. See if we get a bounce, get a higher high, and then continue our way up. But we have reason for exhaustion. Let's look at the order books here. DP saying, I know someone's going to be very lucky to get the free one-on-one session. I'm stuck getting ready for work now, but I'd love to have, yeah, that'd be great, man. Maybe next time. It's not going to be the only time I do this. There'll be no more opportunities. It's something I want to do on a regular basis. Good morning, Andrew. How's it going, man? Okay, so yeah, well, let's go over Bitcoin, take some requests, and then we can have someone jump in and ask any questions that they want. So for Bitcoin, yeah, I kind of went over a little bit already when we started, but basically we were waiting on this. We talked about this yesterday, where we were waiting for Bitcoin to get up here, so we can have that positioning for a better short and all the confluence required for the short. So now we're at a value high. That's check mark 1, right? We got one rule met to prepare for shorts. I was a little worried that we might not get there because of the amount of sell walls that we had along the way, but it just melted right through them all. Well, I wouldn't say melted because it actually slow crawled through that period. Right here is when we had the sell walls, and we just slowly chipped our way through it. And yeah, now we're at a value high. We have a stupid amount of liquidity right here. If I pull up the liquidation heat map, and let's mark how long it's been since we've been up here. It was about 12 days. So we want to have the like a 4 day, like a two week heat map period, and then we'll also look at the 24-hour heat map period too. Let's look at the 24-hour first. Okay, so we have actually quite a bit of liquidity on both sides from the last 24 hours added in here. I know we have more reasoning to go up based on like larger time frames, but it's interesting to see that if we do get that sweep to the upside, we're going to have additional confidence for reasoning to go to the downside because of the amount of liquidity that we have built up below us. So that makes me feel a lot more confident in the short when the short plays out. Let's see, 111,000. Yeah, 111,100 is a key level for the local liquidity. So when we had price action come up, basically what ended up happening is like people started entering to shorts roughly around here. And during that time, based on the leverage that they chose, they're going to be liquidated if price comes up to 111,000 like in 100 area right here. So people here will be liquidated if we get to here. And if you're a market maker, where would you want to go? If you're wanting to bring the price down, you want to make sure that your competitors aren't coming with you, right? New York's famous for that. It'll come up, knock you out before going the direction that you just predicted, right? So that's why patience is pretty important. See what we get here. We haven't got the change of character occurrence yet on the 15-minute. The 15-minute time frame is the time frame that I kind of prefer for that. All this here is internal. We have our technical change of character occurrences here. But if we get the price action to come up higher, it would be here. It will become our strong low. So I'm hoping that we come up, grab the liquidity, maybe give us a local SFP. That would just be too perfect. I don't think we'll get it, but that would be nice. Or at least some kind of structural confluence, like a double top or a head and shoulders posture. All right, and then come down. We'll see. So that's liquidation heat map on the 24-hour. Let's wrap around the 2-week period. So here, let's go a little further. Let's see. So we got these previous highs marked included. So we grabbed all the liquidity from this mark here. Let me just pull back here a little bit. So we grabbed all this liquidity that was resting from this spike up, right? When we came up through here. But we're looking at this spike right here where a large amount of liquidity was just put into the market before we ran down. So let's go back. So that spike, we can see a large majority of liquidity kind of like rests above that local high, well, that previous high, and the all-time high over here. And we got, because of the 24-hour reactions, we've got even more liquidity compiled. So I could see reasoning for us to come up to like 111,000 before returning back down. So what I'll be doing, I'll mark the wick that occurred just before the drop. So we know that liquidity is starting to be swept. So we pretty much have it marked already with this orange line. But let's just change it up so it's a little more pinpoint. There. Oh, my bad. Wrong trend line. There we go. All right, so we have a wick level here where we could potentially get an SFP off this level. See, I'll be watching. You kind of want to start from the lower time frames and work your way up when it comes to SFPs. So what I mean by that is like when let's say you're looking at the 15-minute time frame or the 5-minute, and we're coming up to this level, and we don't see an SFP. Let's say a candle closes above this. When a candle closes above this on the time frame that you're looking, it invalidates the idea for a legacy SFP. And then you can slowly work your way down the time, like up the time frames. So we can go from the 5-minute to the 15, to the 15-minute to the 30, then the 30 to the hourly when we get to this area to see if we generate a wick that confirms like an hourly SFP or a 15-minute SFP, stuff like that around this area. But what we want to have happen before we grab that liquidity is to hopefully have some kind of base of structure and then grab it. Because that way we can get the confluence of like local SFP. It's a little bit easier to trade too. But we can watch these previous highs here too. So we can close back inside this range. Okay, so yeah, that is Bitcoin. So short term, what we're waiting for is hopefully a return up. We got some bullish posture right now with this inverse head and shoulders off the value area high. We got above the VWAP. We're about halfway to, a little further than halfway through our target for this inverse head and shoulders posture. We mitigated the supply risk here when we came up here. So what we want to see is get that higher high, and then we'll start seeing likely continuations along the way up to that area of interest. So right now, the moment we get this higher high, get above this high, we have a good level here to monitor for the short. So hopefully we'll front run it, but this will be the key level that we want to have broken to define a potential rotation down to this value area low here, while being mindful of the point of control along the way at 107,563. Alrighty, so that's Bitcoin. So we know what we're kind of preparing for. We've been preparing for the short all day yesterday. Couldn't take any trades unless you're in an existing long position. You couldn't really do anything, at least safely, in my opinion. All right, so now we know what to prepare for. So we can look at altcoins for you guys, and then we will let someone jump in, and I'll answer their questions in the live. Well, we have about 10 people volunteering as tribute. Okay. Let's see, maybe we'll invite Alexander next. I got invited Paul, but he's teaching right now. It's helping his class. So yeah, so we can invite Alexander in. I did just invite Runway, so if Runway answers me first, then I'll message Alexander next. We gotta grab your handle, man. Just watch out for any scammers. There's lots of Kyle impersonators out there, but I'll send you a message right now. Get you ready. Um, all right, sent you a message there, Alexander. And while we wait for him, let's see. We had a request to look at Axel, AXL. I'm going to set an alarm first for this low here. I don't want to miss anything in case Bitcoin wants to be weird and break the low first. All right, setting this alarm. We'll do it only once. So you get, once we get a tap there, then we'll get notified. Okay. All right, so AXL. Okay, so let's pull it up on Binance. Oh, this thing went vertical, straight up on the 15-minute. In 15 minutes, this thing jumped 74%. It increased its market cap by 74% in 15 minutes. There's got to be something news correlated with that, not just based on structure. Yeah, we see a double bottom posture, right? You can tell that something bullish is about to occur. Did it give you time to enter safely? Well, not really. Let me zoom in for a second for the 15-minute. Nothing. Well, yeah, down here you could have dissected like the 15-minute time frame and see an entry here, right? We got a double bottom structure. We got the break of structure right here from a rotation up. So during this moment right here, I would have jumped in the trade, put my stop loss card here. Would have been close being stopped out, but then ran up very shortly afterwards. Now, whether you held that anticipating, so you'd probably watch this fractalization, right? So we have double bottom posture here, double bottom here. It's leading into a larger neckline here that you kind of would watch this like a hawk if you jumped in here, right? Because after we broke this momentum and got our double bottom structure, it would help define this massive move to the upside. Like the measurable base target for this thing from here to here, bring it to the neckline. Yeah, we surpassed it. Yeah, so you wouldn't anticipate this unless you somehow knew like maybe there was some kind of like confluence with news that helped support this. But yeah, you had some reasoning to get in bullish, preparing for a big move up, but not, you wouldn't expect something like that. Just blast your face right off. Zoom out a bit, see what's going on the larger time frames. So if this is the full price action of the asset, it's relatively young. I feel like there's more to it than this. This is just the listing on Binance. So let's see. Yeah, so we broke some momentum, like the internal momentum to the upside right here. And then we had a bit of a pullback after we double bottomed our way out, broke that momentum. And then we had it pull back a bit, got that double bottom. Then we basically, it brought us back to where we just were, like what we were talking about. The barriers concern I have for this now that we were all the way up here, I would have said here as well with this supply concern right here. It's kind of where we're at now. I could mark the fixed range volume profile from this key level to here before we came up and lost this level roughly here, yeah. And so this whole zone right here is a supply concern too. But yeah, basically meeting the downtrending momentum. We're fighting against the 200-day EMA. We got above the 50 EMA. I'll look to see if there's any development with the asset itself, like news-wise, to help induce a move like that. Like TA is great, but I don't think you'd have so many participants from this double bottom break that would cause it to almost double its market cap. So like right now, because we're like trying to mitigate that supply risk, I'd be prepared mostly for shorts, kind of like what we're positioned for with Bitcoin, right? So if we pair here, we've got our base right here. When we came up, got this huge impulse move, built a base, another impulse move. It became demand the moment we had that second impulse move here. This is an area of interest for longs. We've got a break. Oh, we're about to get a break of downtrending momentum in the low time frames here. So we could come back for our second test up since we're just tapping into this for the first time. And we're kind of like generating a potential range here. So if we come up and we break this high, we'd watch this low for the potential rejection to come back down. The longer we stay range bound here, the better, because these kind of moves are usually not sustainable. Think about the holders down here, the people that might have been just investing for the first time down here, or someone who might be holding at a loss around this area for such a long period of time and they just want to get out. So when you have this massive move, the moment the people that hold the asset find out, they begin to sell. And we're at a supply risk over here on the left-hand side. And supply risks are basically the same thing of what I just described. They're holders that are likely have residual orders in this area that are trying to get out, trapped investors, and those trapped investors are able to exit now at break even or a small profit rather than accepting a loss. So right now we have the confluence of the 200 EMA being in line with a potential key level for a break to the downside. We have this supply concern here. So I'd be preparing for shorts. If we come back, break this level, the drop that occurred, or the pump that came up, could give us a drop that's almost the equivalent. So be careful, because we could get a move to the upside, but longing it, I'm not sure what the liquidity is like with this asset. If you long it and then your stop loss isn't honored, there could be a slippage event that causes you to lose more than what your stop loss is set for. So be careful trading like low liquidity assets. But yeah, it looks insane. Crazy move. Let's go back to Bitcoin. We're getting that move up that we wanted to have here. So yeah, just mark it up. Just for anyone who's just joining in now, what we're preparing for Bitcoin. So we want to have basically like price action to slowly crawl our way up here, grab this liquidity, give us a change of character currents for a potential front run. And then ultimately we want to have this value area high. We want to break through the value area high and through this low. Tons of liquidity up here. This is the momentum that we could follow. But yeah, that's what we're kind of hoping for. We got the really good positioning for the short. We just gotta wait for the picture. If we break this low first, I might still take the short, even though it won't give us like the proper structure that I normally would want. The positioning is really good. I'll probably just risk half of what I usually risk if we got something like this instead. Okay. Joe saying he caught it today. Nice. My ChatGPT is not working this. Anyone else having problems? I use ChatGPT all the time, but I haven't used it this morning yet. So I don't know if there's any problems, man. You missed big time action yesterday. Sitting in the hospital waiting for the blood work. Oh, I got you, man. Well, yesterday it was mostly for us, or for me at least. I was mostly waiting for us to get here because I didn't get any longs through here. It just wasn't any safe conditions for me to want to jump in. Like typically when we get acceptance into a valley area like this, it gives us a warning sign that we're going to run up to the valley area high. But after having such an aggressive like uptrend, I don't like getting into longs when all the oscillators are exhausted. So I want to be patient. Just wait for the short instead. Okay, so let's take a look at. So Alexander didn't answer. So I'm going to take a peek at, see who else wants to jump in. Let's grab the list. We know that Masala's up and running. You just liked it recently. So let's invite him or her on here. So we've got handle here. Shoot you a message. It's usually a good chance that I've messaged most of these people before in the past. Okay. I just sent Masala a message there. So if anyone who's just jumping in now, understanding what's going on, basically I'm going to be doing, like once in a while, I'm going to bring either some members in or some YouTube, like some subscribers in to be able to get like a free one-on-one in the live where you can ask me any questions that you like. And then it's basically just free like coaching call kind of thing. Ask any questions about trading or about assets or about risk management, anything. What's up, Tom? How you doing, man? Tom Crown's in the house. Okay. We got a request for Solana. We can take a look at Solana. We've got a Solana chart already. I'll give you guys a chart link here if you guys need it. So after we're done the analysis together, you can take a look and see if it'll help you out. I know we were preparing for an SFP or a short here, but neither of them, oh man, it just had some relative strength and ran back up. We got, because we had yesterday, we had the confluence of being at a value area high. Our key level was next to a previous point of control. We just had to mitigate this demand zone here really quick first. And we did, but we never got the confirmation of the continuation. Let's see what's going on up here. So at 158.65, I have marked as a key level. Why do I have it there? Okay, which previous levels of support and resistance. We can delete that. We're building a bit of a double top posture on the larger time frame. So in the hourly, would be really nice if we swept that high first, give us a potential SFP opportunity, right? If we grab that high, and maybe we'll get structural confluence as well with the double top. It looks like we could be beginning to fractalize double tops. So if we look at the 5 minute, you see we got like a double top posture here. We could come up, do the same thing, and then define a potential continuation down if we break this key level right here for its larger time frame neckline level. And with Bitcoin's positioning in line with that, being at its value area high, it could have some influence over the price action in Solana has a decent amount of like Ethereum liquidity. So when Bitcoin moves, Ethereum moves, and then when Ethereum moves, it influences Solana to move slightly as well. Solana does sometimes have relative strength and does things on its own, but it's usually like fairly news driven when those kind of events occur. But short term wise, Ethereum has a decent amount of pairing control over Solana. Okay, Stormtrooper for real? I don't know what that is, but that sounds cool, man. I'll take a look at the DMs and see if it's all a little unprepared. Oh, let's ask first. Are you? I understand might be a little nerve wracking as well to jump on a live in front of a bunch of people. I know because I do it all the time. So like I'm a hardcore introvert and like doing stuff like this is like just against every fiber of my being. But I really enjoy like helping people learn and teach and get the heck out of their like 9 to 5s that they might hate. Like we've helped a lot of people quit their job to become traders. So I get it. You do not have to have a cam. No, no cam needed. Okay, I'll give him the invite. Let's invite, copy. All right, cool. All right, and then we'll look at requests for another asset while we're waiting for him or her to jump in. So we did Solana, we did Axel, we looked at Bitcoin. SPX is another request. So let's see. We have there SPX USDT. How has this thing been doing? Let's look at it on the Bybit. Bybit's got decent liquidity. What we were looking at last time was the uptrending momentum. Yes, this thing's been on a tear. I've been trailing key levels for this thing for a while now. It just doesn't want to stop. So if we get, this is still a key level here. We got a little bit of evolving momentum. We're getting some distance away, some negative space away from the more macro momentum here that's been holding it up. How long has this thing been holding up for? Since it's been at 46 cents. Been holding that momentum. So the pace of the buyers have just constantly been undercutting each other, following this trend line. So again, like every time I talk about these momentum lines, you got to watch the order books. Get your vertical line out like this, see where the current candle is, and see how that aligns with your momentum line and see if there's a massive buy wall trailing the price action. And if there's a buy wall trailing the price action, then the demand's clearly showing you that we're not going to be breaking this trend line just yet. But we're starting to get positioning above a previous value area high, which I believe might actually be the all-time high. Yeah, I think it is. Yeah, so assuming this is all the price action of this asset, and that we got a good proper chart for looking at the macro and giving a macro analysis, we're close to getting it to the point where 100% of holders are going to be at a profit. Even the person that bought at the top of this wick that could be trapped up there crying might have an opportunity to get out around 177, which price, like percentage wise, is pretty large. But for a market cap like this, it probably won't take very much. So it needs to go up another 22% to get there. So I would be preparing for definitely some kind of bearish price action going on through here. If we start seeing some structural confluence, get like a double top, an SFP, we could get a legacy SFP off these highs. And then maybe preferably also have the break of momentum and confluence with that. Then we can start at least targeting $1.05 from this high to this low, which is a pretty huge correction in my opinion, like 30% drop. But if we look at the behavior of this asset and how it moves, we have those moves all the freaking time. So we've got moves just from this unclaimed high before we got that break of structure is like a 40% move. Unclaimed high here from before we got that break of structure, 20% move. So these moves happen all the time. So it's not out of the cards to see like a 30% correction after it literally just pumped nonstop for 40 days and gained 200% of his market cap. So I'd be preparing for a correction now that we're at this previous Valerie high. Just need to wait a little bit because I'm looking at the 6-hour time frame. So like this could take some time for it to develop a reversal. It could take weeks. So just prepare mentally if you're a holder of this asset that your warning might come to you, and that it will likely just give you a bit of time before having that drop. Let's look at the previous value area high. Like how long does it usually take for it to mitigate its high? So here we swept this high, then we went range bound for 5 days before confirming the drop to continue to the value area low. And it's not too bad with following its key levels. So it's looking good, man. Just get your bear goggles on because it's almost at the point where it's going to get extremely exhausted. Okay, so Masala, sorry if I'm butchering your name, is here for a coaching call. I've got until 9:25 in the morning. So about 30 minutes or so before I have to do another coaching call with the community. We're going to be trade hunting together. So I'm going to add him in there now. All right. He doesn't have a camera. So now he's just this little dude over here. How you doing?
Hi, can you hear me properly?
Yeah, I can hear you.
Awesome. Hey, thanks for doing this.
No problem. It's kind of unique and weird. It'll be hard to get used to, but
Yeah.
you can ask any questions you want, man, or like if there's anything you're struggling with your trades, or if there's any assets you might want to look at together, stuff like that, man.
We could do that also, but I think I'd like to start by just asking your advice. I'm obviously a beginner. I've been doing this for about a year, a little more than a year, following also your Discord and your signals and everything for a long time. I've got pretty good on the basics of market structure knowledge. I know enough to follow all the signals and all the all
I
the
got you. Yeah.
vernacular and all that stuff. And I feel like I've hit like a plateau a little bit with my trading, where I my portfolio, the size of my account isn't really going up steadily. I feel like I struggle a little bit to do my own technical analysis, and I was hoping if you could give me some advice on what would be the best way to kind of make some real headway in
I
this
got you.
stage.
It sounds like you haven't solidified your rules just yet as a trader. You've no analysis. You got market structure. You might have an idea of like what kind of indicators you might be used to, but do you have like a defined set of rules where like you can have like a checklist?
I'm basically adopting yours. I'm trying to just follow your
Oh, cool.
strategy, and I figure if I can pretty much get good at that, I can make some more progress from there. That was kind of my thinking.
That's a good idea. Yeah, if you know there's already rules that exist out there that work for someone else, you can just take theirs and run with it, right? There's no
Yeah.
point in trying to reinvent the horse and yeah. So, so since you are just copying the rules that I use, then you just need to make sure you have a really good understanding of the indicators that I use, right? So if you got a decent understanding of market structure, that's the foundation of almost every strategy. Like understanding where the break structures are, where the unclaimed highs are, where the change of character occurrence will be. I hunt for changes of character, but I need a really specific positioning for the change of character for my rules to work. I prefer to have the change of character at a Valerie high or at a Valerie low. Anything between that is something that I would normally try to avoid. It's either the R&R is not there or the confluence isn't there. So yeah, I'd say maybe like make sure you got your market structure like fully understood, so that you can start moving on to like understanding when to use the fixed range following profile, and then like back test the crap out of it. Like go back in time and give yourself a chance by like getting like maybe like a 200 can't like trade sample, and find out what the win rate is based on your back testing performance. Then like forward test it with like 50 trades or so. After that, find out what your percentage win rate is. And if you find that you're like still stuck, you're not progressing, and you have like a win rate above like 50%, then there's something wrong with your risk management. And that might be something that we need to like focus on together.
Above 50%? Or do you mean below?
You want to have your win rate. You want to try to at least have a win rate above 50% if you're using.
Yeah, as a minimum.
Yeah, because like with my strategy, my base average, my net R&R is a 1 to 2.6, and so that kind of requires a win rate kind of on the higher side to support that kind of R&R. Like this will support a win rate of like around like 35%, and you'll still be around like break even / kind of profitable, right?
Yeah.
So having a win
Makes
rate above
sense.
50% will allow you to scale really, really well. So make sure when you do your back testing that you are executing your trades with the win rate of above 50%. And if you did really well in the back testing, then the forward testing is the next stage, like seeing how you do in a live environment with a small amount of funds. And then you can scale with more funds after you establish a win rate of above 50% in the live environment. If you decide to change your rules and go with something else, make sure you know what the net R&R of that strategy will be, so you know what kind of win rate it could support. Like a 1 to 4, for example, net R&R, you could have like a 20% win rate and be at break even. But your win rate, usually with strategies like that, are typically lower than like the strategy that I've got. For example, like my personal win rate's like 84%, but there's some things that aren't a part of the rules of the strategy that I still do. Like I look both ways before crossing the road, like looking at the order books, seeing if there's any buy walls that might interrupt my target to be hit. And if I see I won't get hit by a car along the way down, then I'm going to way more likely to take that trade, or it might keep me out of trades that my rules would normally kind of like bait me into. So like order books are great for that kind of stuff. I feel
Did
like
you
I just
also
cut
do
you off
that
there.
in the beginning, like when you first started trading? Did you also check the order books, or did you kind of?
No. I if I were to say like what I did in the very beginning was all the degen stuff. Like I didn't use I didn't use my stop loss at all. I was a martingale trader, so I was adding to losing positions until it became a winning position. And sometimes it didn't. And when you're a martingale trader, when you lose a trade, your losses are really heavy, a massive majority of the time. So it took me
Double down.
Yeah, it took me probably a year before I got like where I could say that I was profitable in a responsible way, because like I would kind of like tricked myself into thinking I was a good trader when I grew my account from $26 to 15 grand. But I was trading with rules that wouldn't allow me to kind of go beyond that. If I tried,
You could basically lose all the 15 grand in one go, basically.
I lost half of it in one trade. And that's when I realized I was doing something wrong.
Yeah.
And it was, of course, right after I quit my job. So you can tell, you can kind of get the vibes of like what I was probably feeling at the time. I was kind of like in panic mode.
Yeah.
But
I was going to ask you also, were you doing this full time, or were you working full time while you were learning to trade?
When I was, I would say that I think it was the first year I was working at a call center and trying to figure this out, working 12-hour shifts, then coming back home and then spending like 3 to 4 hours up till like 2 o'clock in the morning, sometimes just trying to figure this crap out. And then when I got my account to 15 grand, I saw like the gains I was making would be able to support me like double what I was making at the call center. So I quit my job. And then when I lost half my account, I didn't go back to my job because I hated it way too much. So I went to do an Uber, and I used like that because Uber allows you like to turn off the app whenever you want. So if you found a trade opportunity,
flexible.
You could just, yeah, exactly. You just jump in whenever you want and then turn the app back on while the trade's running, and then make money while you're trying to make money, kind of thing.
Yeah.
But yeah, it wasn't when I got my account up to around 300,000. I just stopped doing Uber and did this like, yeah. Because I didn't want to pull from my accounts. Whenever I was like getting those gains, I wanted to be able to compound. And if you are only relying on your trades, you can't compound as quickly unless you have a large account size, like $100,000. It's very easy to compound and pay your bills at the same time. A lot of people can live off like a $30,000 account, but I need to be making. I didn't want to just make what I needed anymore. I wanted to make money and like have threefold what I needed for, and like building an emergency fund and building savings and grow like my account in general.
Yeah, I'm the same. I'm also working full time now, and I'm doing this pretty much anytime I have any free time at all. I have about 30K, but I don't really use it to trade at all. I'm just investing in stuff like major cryptos and just trading with like $1,000, trying to turn that 1,000 into maybe 10,000 just as a start. And yeah, it's a bit of a struggle when I'm working full time and I to find the energy to sit down to do technical analysis and to backtest, especially backtesting. I don't know if you when you first started, did you find it difficult to actually backtest your strategy?
Oh, it was tedious, but it wasn't too difficult. So like what's really, really important when you backtest is to find out when you are going to be available to trade. And you say you're working, so you should backtest maybe like a 2-hour window. Maybe there's a 2-hour window per day or an hour window per day that you could trade, and then backtest that window on each day using a sessions indicator. You don't have to go crazy and try to figure out what time it is for each thing. Go to like your indicators and just use like, you can look up sessions, and there's one called FX Market Sessions. If you click on that indicator, it'll allow you to customize your own session and then backtest within that window, see how it works within your availability. And then when you go to forward test with real funds, you can be strict to that window, knowing you can, because you know based on your data how well you would trade during that session or during that time window that you've made for yourself. And if it doesn't work out well, then you know in advance that you shouldn't be doing it and maybe should be trading a different strategy that within that time frame. Like for example, like my rules work extremely well during the New York session. Like here's a good example here on my screen where we got that confirmation retest off the value area. You got that break of structure for continuation, and we targeted the value area high. Like that all happened during this New York session. And my rules start to perform less, like not very well during times of low liquidity, like the Tokyo session tends to be one of those sessions that it just doesn't really perform well with my strategy. Luckily, I'm asleep during that period, so I got lucky where my rules align with my schedule. But yeah, I'll go through the sessions indicator, then back test your rules. Choose the window that you're available. Like there's a little clock here between X time and X time that you know you're going to be able to trade in. And I understand like the energy part kind of sucks when you're tired after work and stuff like that, but it just depends on how badly you want to get there, man. And
yeah, for sure.
It's you can even like rename it so it's like MSA. There we go. Just call it the Masala session.
Yeah.
Good to go.
Yeah, that's a
Yes.
good idea though. I didn't think of that. It's good.
Yep. And just anything that you're kind of struggling with understanding too. Any indicators. Once you understand like what kind of confluences to look for with the indicator, you should back test and practice it. So when it comes to a live environment, you know how it'll behave. You know how it might work alongside with your strategy. Like the VWAP is basically king. That's one indicator I'd recommend have everyone have on their charts. If you're using my rules, you're gonna have to have a good understanding of market structure, so you can use the fixed range following profile. Understanding a break of structure is going to help you understand like when to start pulling momentum. So once you have your first break of structure, you can start using it as a guide to tell you where price action might go. But yeah,
I had a question. I just blanked. Give me a second. Sorry.
yeah, no problem. Yeah.
Oh, I had two questions. One is, do you recommend using some kind of just momentum indicator with your strategy? Because I notice you don't really use that. You don't really necessarily use the RSI too often, or market cipher or anything like that. Do you maybe recommend that for someone, maybe a beginner, someone like me, to add it on, or is it not really super important?
Well, if I were to remove the RSI and had no oscillators at all, my win rate probably would only drop by like 5%. But that 5% matters in the grand scheme of things, like long term. So I wouldn't say it's the most important thing, but I would recommend having an oscillator to help you identify exhaustion at key levels and divergences, because that could help support that confluence could help support your idea when you're trying to prepare for a trade. So if you're going to pick one, a beginner-friendly one is the RSI, and like it doesn't mean only beginners use it, because there's institutions use the RSI too, like big players use the RSI. So it's easy to understand if you want to use the RSI. If you want to use even easier, something like the divergence one that I've got on my screen, where it literally draws bearish divergence and bullish divergence for you. That's a free indicator too.
Yeah.
Another good oscillator is Market Cipher. There's one called Not Market Cipher B, which is basically the equivalent and doesn't cost you anything.
I actually found a free Pine script code in Lucas's channel on the Discord.
Oh yeah, I saw that. I was like,
Yeah, he just dropped it in there, and I was like, "Thank you, that's great."
Yeah, have you added it to your chart?
Yeah.
Okay, cool.
It's working fine. I'm actually just starting to learn how to use it because there's a lot of stuff on there, and it's not super beginner friendly. But
Lucas and Brian are really good with that indicator, where you can they'll help you identify like what a trigger wave is, so you can use it for confluence, or how to identify the divergence. It also has the RSI built right into it, so you can use the RSI on it. That's why when I started using that indicator, I just noticed myself just like suppressing the rest and only watching the RSI. So I'm like, what's the point of me using this if I'm not kind of like focused on the other stuff? I just thought it was kind of handy seeing the money flow on it in confluence with like the RSI stuff. So
I'm just learning more about generally the Fibonacci strategies and the strategies that use market cipher as like a main part of the trading strategy. Yeah. And I'm hoping to maybe get some of that knowledge and apply it to your strategy somehow, kind of combine the best of both worlds.
Like fibs allow you to front run my strategy, so you can get in before my confirmation, and then you just use my confirmation to tell you to stay in your trade. Same thing with like SFPs. Like I'll front run my rules all the time with SFPs because I love trading SFPs. They're easy to understand. Their invalidation point is very easy to identify for your stop loss guard. And you want easy. You don't want to be fighting for your money. You don't want to overcomplicate your trading. So I'd love for an SFP to occur here when we grab this liquidity, so we can front run this potential break here, for example. But yeah, man, it's a good plan. If you're trying to learn, I like 2 sets of rules, like the Fibonacci rules to front run, change a character, like setups like this. you'll be trading changes of character and stuff like that with fibs, except you'll be doing it based on like the internal price action within it in a lower time frame. So like right now, for example, we're looking at the 30-minute from this high to this low. If we come up here and start mitigating this supply risk in confluence with this Fibonacci level between the 618 and the 786 on like the 3-minute, if you see an opposing change of character, that helps you identify if the Fibonacci level is being honored as a form of resistance or support. And then from here, you can potentially jump into a trade, use either the 3-minute structure for your guard or look to your left to see if there might be a better guard. You might sacrifice some of your R&R for security, but so long as you have above a 1 to 2, you'll be fine to target the immediate barriers. And in this case, the barrier would be the level that we want to have for our break for the change. Like it's not a change of character yet, but if we get the higher high, it will be.
Yeah.
And then we get that stronger continuation. So yeah, man, it's a good idea to try to find front run rules as well. But I would have a separate, like if you're going to have 2 different sets of entry criteria, make sure you understand there's 2 different forms of strategies. So have your list of rules for one, checklist, like get it laminated, and then check it off every single time you're done those rules, and then you can enter so you don't have analysis paralysis trying to figure stuff out.
Yeah.
And then
that's what usually happens.
you look around, you find either A, you keep looking for reasons to enter and that just shoots you in the foot, or B, you keep finding reasons not to enter. And the healthier way of looking at the market is constantly looking for reasons not to enter the trade so that you can basically make sure that you're jumping in on a position of strength. But I understand if you keep adding rules that you never had before into your strategy, telling you not to jump in, then you're never going to be able to jump in because the rules you keep stacking randomly that aren't normally a part of your core rules, just keep you out and make you lose opportunities. When you're supposed to have losses in order for you to have wins. So make sure when you have your rules, it's the same consistent rules over and over and over again that you've back tested and you already know the proven win rate of. So like if you know that the rules are met and it gives you a 60% chance of winning, you shouldn't be afraid of that 40% chance of losing, because that would mean statistically, if you lost that trade, your next trade will most likely be a winner. And just let the loss happen.
Yeah.
Like data-backed indicators like the order books will help you like look both ways, like I usually say before jumping in. But that's like the only kind of look around that I would do when I'm trying to like find reasons not to jump in anymore. Because if all my rules are met, I already know the statistical probability of what's about to occur. And then the order books is just that one way of just protecting myself, that one extra layer before jumping in.
Yeah. I noticed that when you're drawing when you draw the lines that mark out like changes of character and so on, you draw them on the bodies of the candles and not the wicks.
Yeah,
usually.
price. Yeah.
Is there a reason you do that?
Yeah. So the wick is the technical change of character occurrence. So when we break the wick, and even if price retreats, so if we came, let's say let's pretend that this is a change of character, right? If we came up higher and then we came back down and that we're preparing for this to be a change of character and there's like a big wick like right here. If price action were to grab that wick and then come back up, then that's technically a change of character. However, because we retreated back up, it isn't a form of price acceptance. And price acceptance is its own rule in its own, where there's more trade participants that will jump in or execute a trade based on price acceptance than there will be trade participants based on just the change of character by itself. Because changes of character, like those areas where you normally have a change of character, whenever we have a higher high created from a break of structure, you got to visualize the order flow. Liquidity normally gets added to the market the moment a break of structure occurs. And if we come up and just grab that liquidity and then return back up, then that likely tells us that that induced liquidity was used as a tool for traders to buy into the market, and we could have a retrace. So to play it safe, to make sure that doesn't occur, it's best to wait for proper price acceptance and the candle close below it. And
Wait, so to make sure I understand that correctly, you're saying when the price takes that higher high and then falls back, well, first of all, when there's a break of structure, it adds a lot more liquidity under the strong low.
yeah.
And then if it retraces, comes back, sweeps that liquidity, that makes it more likely that it will retrace.
Yeah, if we just even if we got the change of character occurrence by sweeping the wick, and we close back inside the range, that's technically an SFP most of the time, or that liquidity was just an inducement for a return back up. It doesn't mean we have to create a new higher high. Most of the time we don't, but it does mean that we're likely going to pull back, and you might be able to use like Fibonacci, for example, to define where that pullback could occur to, and to get in on a better entry before returning back down. Like, let's look at the daily structure, for example, because we just had this happen, like literally just had this happen, where we came down and we swept this liquidity. We technically got a change of character occurrence when we grabbed this liquidity, but we didn't have our close below it, so that lack of acceptance didn't drive the price down. We just had the liquidity swept, and we used that liquidity to drive the price back up. And I didn't think that we'd go as high as we did. I was expecting to hit our head up here. But after we had this doji response, when you zoom in lower time frames, we can see that we basically just had a confirmation of leaving that value area, and we came back up even further. So that's why you didn't see me signal for any shorts around this area, even though we had a daily change of character.
But isn't it a change of character only if the body closes below the wick?
No, a change of character technically occurs just by breaking the wick.
Just by breaking, it's a technical change of character.
Yeah, technically, but it's not a form of price acceptance. So I don't take action on it unless we have price acceptance for that higher probability of continuing the trend in that direction.
And you would do that if the body closes below the wick?
Yeah. Yeah, exactly.
Okay. So then why do you generally always draw the lines at the bodies?
Because that's where, the concrete form of price acceptance is, and liquidity is resting like right below it. It all depends on like the posture. So if we had like a massive wick right here, for example, I likely wouldn't mark this as a key level, because I know that there's liquidity likely resting right below that wick. So if we jumped in on this trade, that could be a potential barrier for a return back up. So I mark levels with the least amount of areas of resistance, areas where we could likely get a change of character occurrence, and areas where we're likely going to get acceptance into another zone of confluence, like a valley area, like this, for example.
Yeah.
So I'll mark key levels where if a candle closed below it, we'd have multiple forms of confluences, not just like a change of character occurrence, if that makes sense.
Yeah. So, for example, for that point, if let's say the price falls down there, sweeps the liquidity, but then the candle closes above the wick, or just maybe around the same point as the body, you wouldn't look for a short there. You wouldn't look for a price acceptance. You'd basically be longing.
It could be, it could be longing.
We're waiting for a better entry.
Yeah, like if we're at a value high, I'm not likely going to be longing. But yeah, I'll be waiting for maybe better positioning or better entry very shortly after.
Whenever you have a setup like this and you're waiting for the change of character, do you usually wait for a retracement? Because I find what happens a lot is I get the body closing below the wick, get the proper acceptance, but then usually it's like a huge candle, or it ruins my R&R. And sometimes I can get in on the retracement, sometimes I can't, and I'm still not super.
I hate it when that happens. Yeah, so
I'm not comfortable with the fibs. So Is that
If we,
true?
so
Yeah.
if we have a situation where we have like a big fat candle here close, and we got that's when we got our confirmation, and our R&R just got like basically cut in half, or it's just not, doesn't feel safe anymore. It's best to try to like, you can, at that point, you can get your limit orders ready. Instead of trying to market in, you can limit order in at the same level that you're of interest.
Yeah.
Basically, like say for example, we closed here, we hope for a pullback to here. Because all your rules have already been met, you can just wait for the potential retrace. You might not get it. Put your limit order in, and then you'll save your money on fees, and you'll get a much better entry just being patient for that. And then you just gotta hope for that break of structure for a continuation. And what's nice about that in a situation like that is you normally get a break of structure to define a new strong high to move your stop loss relatively soon. So getting on those retraces are great for the people that have that lack of patience for being in the profit, right?
Yeah.
And normally when you have those aggressive drops, we tend to get those pullbacks anyways. Same thing with pumps like this one, for example. We have a really aggressive pump. We normally come back and reclaim it, that fair value gap, and yeah. So I get you. It happens a lot. So when it does happen, you just got to give it that chance for a retrace.
And if you get the change of character outside of the value area, let's say it's below the value area low or above the value area high, or even in between value areas, do you jump in on a trade like that, or do you wait until you get actual acceptance into the value area high or low?
I will jump in on a deviation of a value area. But I have to, when I do it, I'm aware that the value area itself could act like a barrier. So if I say, for example, here, or the way I've got it drawn here, we have like an internal change of character in like a lower time frame after grabbing like liquidity. I'll jump in on that, but I'll watch the value area high like a hawk in case it acts as a form of support. Because if we got the higher high after touching tapping the value area high, we're likely going to be leaving that value area. So your invalidation point would be like pretty much where your that like the internal strong high would be for your change of character occurrence.
Yeah.
And yeah, I love trading those ones actually more than I do like trading into the value area, because you tend to have way better risk to reward ratio.
So you would include the value area high in your risk to reward kind of calculation?
Yeah, like I would try to give a gauge of like what would my R&R be if the trade were to stop there. So like let's say if I were to jump in on this, I got roughly a 1 to 2 in this little weird drawn scenario that we got here. So I'd probably jump in on that. And
if it were worse than 1 to 2, but then would you also think, okay, this is not a good R&R trade, but if it gets acceptance into the value area, it's a very good trade because then I could target the low.
So this is important. It'd be a good important scenario where you would put a partial amount in, like for example, like half of what you normally would risk. And then when all the rules have met, then you can add what you normally would. But because you jumped in earlier, your average will be way, way better.
Yeah.
And you'd stay in the profit, and you'd add. It's way better to add to a winning position than it is to add to a losing position, because you just end up scaling your gains, and your stop loss. Usually in a scenario like that, it's already kind of like held either at a break even or in the profit zone.
Yeah, I think I'm looking at something like this on Solana right now. It's
I see exactly what you're talking about. Yeah.
Right, it's
Solana's kind of like leading that.
It is, and the R&R is really not great for the value area low above us. But I was thinking, if I still jump in on the trade, and we actually break the value area, get acceptance into the value area, I can target the high, and then it turns into a really good trade. But I don't know if that's the smartest thing to do.
I gotcha. Yeah, structurally in the 5 minute, I could see reasoning for a short around like 159. I don't like the VWAP being right in our face. So in a scenario like this, like I wouldn't just jump in on a close below this area, because we have the VWAP right here as a barrier. So I'm hoping that we get a little bit more distance away so that the deviation of the VWAP could be a good confluence for a short. And then we just have to watch it along the way. But if we break through that VWAP, then we have a chance to break through the value area high. If we break through the value area high, then we have that continuation likely down to the previous value area low.
I was actually thinking it would just it would go up to another value area above us.
Oh, that could be interesting.
Because that's what I was hoping for. Since everything's going up.
Yeah, I'm just worried about Bitcoin's positioning to allow something like that. And if you look at the posture of Solana, we've got supply concern here that could drive the price down. We had a very strong like V-shaped recovery. So I could see a potential like larger Wyckoff model being formed, grab that liquidity, come down, maybe get that full acceptance into the value area below us, and then return back up for like a massive inverse head and shoulders and drive the price back up to around 180 levels again. It all depends. Okay. Bitcoin's going to have a huge amount of influence over it. Let's see what the dominance looks like. The Bitcoin dominance is going down a bit. Others dominance is going up. So maybe you might be right. Might have that continuation up, but just I'm looking for those potential warning signs that we could be coming down because things are looking exhausted.
Yeah, fair enough.
All right, I gotta head out in about 4 minutes. Is there any other questions you want to squeeze in really quick?
I think just maybe any general last-minute advice if you had to give maybe the most important thing to focus on for someone in my position, just starting out, kind of overwhelmed by all of the things that I have to kind of learn and backtesting and all this stuff.
I would recommend just taking things in stages, learn one thing at a time. You got market structure down. Go through the course. Make sure you if you're taking my rules, we have a whole section just on my rules. Go through the value area stuff. Make sure you make sure you master it one little section at a time. And if you're not confident in your fixed range volume profile polls or your market structure, screenshot your charts and put it in the chart checker thing to make sure you're getting it. And then from there, risk management is insanely important. Be consistent as possible. You say you're trading with $1,000. You should be risking lose $10 on average to gain $20 or more. Get a milestone ready for maybe $1,500 or $2,000 where you start to adjust that risk from, if you grow it to a $1,500 account, adjust to $15 to allow yourself to scale. And then eventually you're going to notice how easy it is to get to 10 grand. If you're really consistent with your stop loss budget, what you're planning on risking. Be as consistent as possible.
I'm doing that. Yeah, I'm doing that. Although I do find myself kind of losing sometimes a bit more, a bit less, just because of, I don't know, fees, or maybe the stop loss isn't exactly where I was supposed to put it, something like that. Is it super important that I really dial in those calculations and the entries?
Yeah. So if you're using something like Blowfin, or a lot of exchanges actually have a built-in calculator to tell you what you're going to lose before you even lose it.
So far, I'm trading on Hype. I've tried KuCoin. They don't really do that.
Yeah,
but I haven't tried Blowfin.
Blowfin's great. I recommend Blowfin. And
I'll try.
The Hype is good. Decentralized platform to trade on. You do have to deal with more slippage than you would with a centralized exchange, but if you're going to pick a DEX, that's a good DEX to trade on.
I might start using Blowfin.
And we also have calculators as well too. If it helps you with managing your risk. So inside the course, in the risk management section, there's a whole calculator you can use where you type in how much you're trading with, how much your stop loss percentage drawback is going to be. So for example, if it's 0.71%, it'll tell you how much margin you should put into the trade based on the leverage that you chose to make sure that you're risking to lose your based on like what your budget is. Like if it's $10, it'll tell you that'll be $10 based on that margin and based on that.
Oh,
stop loss.
another thing that kind of that I run into is if I do have a calculator, but the calculator always gives me a fractional leverage, and Hyperliquid doesn't actually allow me to use fractional leverage. It has to be a whole number.
Whole numbers,
So,
yeah. A lot of exchanges have switched to that. It's kind of a pain in the butt.
Yeah, it's annoying.
So in a scenario like that where it gives you a fraction of leverage, then it basically tells you that you can like maybe you want to add more margin for less leverage to make it so it's like a whole number.
Yeah.
Or less margin for more leverage so that it's a whole number, stuff like that. So if you get a fraction, and let's say it's like it wants you to use like 2.2x leverage, then you're gonna add like about like, or you'll be it'll probably be easier to remove funds to make it so it's an even 2x, or add more margin, so it's an even 2x, right? I understand, like trying to do the calculation on the fly though, it's a little bit pain in the butt when you're trying to trade. And
yeah, sometimes I just jump in because there's just no time. I'm like, I'm gonna figure this out later. I just jump in now because if the entry is just right, it's perfect entry. I need to go to this now, and then I worry about.
Yeah, you shouldn't rush into it, man. Yeah, I got you.
But usually it's actually for your signals, because you send a signal, you're like, maybe I'm usually, sometimes I'm maybe working out or something. You send a signal, you're like, I'm entering the long now. I'm like, oh shit, I gotta do this now.
Try to give warning, yeah.
No time.
Yeah, I got you, man.
But yeah, I appreciate your time. Well, thank you.
No problem, man. You have a great day. Thanks for jumping on.
You too.
First person to do this. Thanks for being brave.
Yes, thank you.
Thanks, man.
Bye.
See ya. All right, cool. That was fun. All right, cool, guys. I do got to head out. But yeah, basically what we're preparing for is either an SFP off this high, a liquidity sweep from these highs here, preparing for this break of structure to define this as a strong low, to prepare for a change of character currents, to start targeting this value area low. If you guys are interested in learning from me or any of the coaches a part of the community, we've got a coupon code right now. There's only going to be 5 of them. Learn to earn is the coupon code. It's in the description down below. If you grab that, then you'll get access for the first month for 75% off. So you can get a chance to learn, see if it's for you before committing like more funds into something like that. A massive majority of people get their money back just from the signals alone. Was it Masala? Yeah, that was Masala jumping in. What's up, Cookie? How you doing, man? HRJ Trading, how you doing, man? This guy gives awesome signals, by the way. So if you ever see him around, HRJ's got his shit together. He's got it figured out. All right, cool. ETH, yeah. Okay, guys. Well, I gotta head out. I'll see you in the trade hunting call. It starts in 2 minutes. So anyone's a part of the community, I'll see you in the room there, and hopefully by then we'll find a trade. It might not be the Bitcoin trade. We might have to find something somewhere else while we're waiting. But yeah, I'm in bear mode right now, preparing for the return back down to roughly around this value area low, where we'll define the range the same way we did back here, and hopefully get a continuation back up after that. I'd love to long around this valley area low to prepare for a potential new all-time high shortly afterwards, or at least to the valley area high if we got forced out, and then we just stay in this range and try to catch every bottom to front run a potential new all-time high, or every top to potentially front run a continuation to come right back down to where we were. Because now that we got that daily change of character response, we have a higher probability of getting lower lows, but we had that really strong retrace first. So we'll see what happens. But this is step 1, preparing for a short. Let's see what happens. All right, guys, you have a great day. I'll see you tomorrow at 8 a.m. And crush it, trade safe. Make sure you use proper risk management, and I'll see you guys in the next one.